Hello, welcome back to my network. We're at Beaver Creek again, and I'm with Tim Clark, the CEO of Fury Gold Mines. Tim, good to be with you again.
Peter, great to be back.
Good. Obviously, 12 months ago, we had a chat in this same spot. Why don't you, before we go into what's happened, it's been a really important year for you guys, in my opinion. Why don't you tell us a little bit about who Fury are, and then we'll dive in.
Yeah, just as a quick reminder, Fury is a high-grade gold exploration company in Canada. We've got 3 properties that we actively pursue drilling and doing work on. And we also own a big piece of a company called Dolly Varden Silver out in British Columbia. We're the largest shareholder there with about 18%. Our hope is basically be best in class, and that's the sort of the goal of the company. And we've been a pretty active junior in terms of raising money and putting it into the ground, and that's kind of who we are.
Good. All right. And I think the next thing I always ask is about sort of capital structure, and I quite like asking you this question in a way because you are probably on an enterprise value basis one of the most undervalued companies probably at this conference or maybe in the industry. So why don't we just talk about a bit about the capital structure?
It's not the prestigious award I want to get, but it's kind of exciting because I think when I came into this company, what I was excited about was I had a really good team, and over the years I've learned that when you invest in a company, it's all about the quality of management, quality of your board, quality of your workers, and then you look at the assets. But this one had really interesting assets, and it was big properties next to big companies. So our assets, if you look on a map, and when I walked into one of the biggest investors in the United States, looking for his support, he said, you go no further, all I need to do is look at your map because I believe in the consolidation story, in particular Canada. And we own big swaths of land that are highly prospective, and 2 of which have big resources on them right now. And so we've been looking to kind of develop those, and at the same time, this Dolly Varden piece has been interesting. And how that came about was when I came on, we needed to refinance the company. Plus, the guys who were running Dolly Varden, Sean Kunkun, were superb at what they do. And I thought that asset, when we put those 2 assets together, it would be a better company. And it's grown significantly. And at the same time, Hecla came in and bought in 5, 10, 15.6% of the company because of that togetherness. And we've kept our shares. We've sold a few off to obviously pay for what we do. My job is not to manage their company, it's to leverage the value of that asset. But that Dolly Varden, I think we originally took $45 million in equity and $5 million in cash, and that equity value is now up to over $60 million, and we've taken an additional $12 million in cash off of that to buy and invest in other properties that we own. So our valuation's gone up significantly, and at the same time, we've brought our costs down by 50% over the last 3 years. I think we've gained a lot of respect in the capital markets from investors on how we culturally look at spending money and being frugal and don't take business class seats and all that kind of good stuff you want to hear. That's the stuff that you want to hear. And the reason why we do it is because I sat in the capital markets for 25 years. And I listened to all these guys, and I knew all the BS that people were selling, and I didn't want to be one of those guys. I brought in some big investors in this company. Some of my key investors I've spent 25 years cultivating, and a lot of my family and friends, and I needed to look them in the eye and tell them that the money's going in the ground. And I put a lot of my own money in, so that's added an incentive. But as the market with this junior market has been, and stop me, interrupt me if you want me. Ask one question. But what the conundrum in the junior market right now is no flow has come into the general junior names.
Yep.
And historically, you always see the large cap. You see gold move, then you see the large cap. Then people, once they make their profit, they sell those and go down to the mid caps, and then it's the juniors. And everybody right now is sort of like too scared to jump in,
Yep.
right? They're too scared to jump in the juniors because they're worried that there's been too many other assets that have been developed. There's been a historical lack of capital markets allocation in the space. But I would say, having been in the mining space for 25 years now, you can see the trend that it's significantly improved, and it started at the top. And you need the leaders in the industry to dictate this, and culturally. So the majors are cleaning up their act. They're getting much better about allocating. They're not overpaying for assets like they used to. And I think it's going to fall down to us. And I think the catch here is because there's no flow, even though our Dolly Varden position, because there's flow into silver. Silver had a big run up, and Dolly Varden is a very notable takeout target. The share price is effectively doubled for us, but it's created an arbitrage on our stock price.
Yep.
And that's the crux of your valuation question.
I think as an investor looking at this though, obviously, and I think because when we spoke last year, there was a very similar story that we were talking about in terms of you had a very low enterprise value based on Dolly Varden and cash, and roll forward 12 months, we're in a similar position. But what you've done in that 12 months is de-risk, especially with Claire, quite substantially with this new resource, right?
Right.
So the way I look at this, you can literally come in and buy stock in someone like Fury, and with the Dolly Varden and cash, you're looking at around a 12 million Canadian market cap, and you're paying for over 1 million of high-grade ounces in the ground in one deposit alone, as well as greenfield potential, massive greenfield potential.
Well, yeah.
So that's the scene. I guess the main thing is, if people are looking at this, how much more can you really expand Eau Claire and actually turn this into a meaningful deposit that's going to be attractive to someone else? And
that's great. No, great question. So I look at running a junior company as creating multiple levers to get value into your company. We're not a one mine, one resource company. That's unique. The hard part is telling the story about it and everybody kind of following. So we attack each of these different resources with different ways of trying to increase the value. I'm on the board of Dolly. I help promote Dolly because it's in our best interest, and I think they have something interesting. The Nunavut stuff, same thing. We get zero value for a 300-kilometer greenstone belt. 180 million has been put into it historically. I went up there this summer. It's not worth zero, especially in this market. And the irony is most of the meetings we had last year and this year were all producers asking us about Nunavut. Okay. Now, if you look at the Eau Claire thing, the Eau Claire is interesting because we own the joint venture, which we bought out from Newmont, which is next to their Eleanor mine. It's up for sale. And we own this 55,000 hectare property just south of it. And we have a resource on it that was 1.3 historically. We did 3 years of drilling. We did a resource update. We added 40% to that resource this spring. Stock price didn't move.
Yep.
We bought out Newmont's joint venture, which I think is one of the best strategic moves any juniors made this spring, personally. And we got zero value for that. No, stock didn't move. We've continued. We just actually had a press release out yesterday, and we went out 14 kilometers away from Eau Claire, and we found a new greenfield discovery of 3 meters over with 12 grams. Yep. And that's significant because in the last couple of years, we've developed over a dozen of these anomalies across the property on top of the resource. So when we sit down with the big companies, they're like, we love the idea that you're closer to 2 million ounces now, and it's wide open. Because everything we've done, we have not tested the barriers underneath, to the east, the west, or the north. There's still a lot of room to develop. But if you can find a string of pearls, we got Percival, we made a maiden resource. It was a discovery that the other company had passed on. It's over 200,000 ounces now back into the resource. We found Serendipity as of announced yesterday, and we have all these others to test along this 30 kilometers.
And these are all mainly satellite potential, or even actually individual mine potential.
They could be another Eau Claire. We don't know yet.
Yeah.
We just haven't drilled it out yet.
One thing I would like to ask you, you said around this Newmont JV that this was strategically quite a, I can't remember the exact wording you used, but essentially you were saying that this was a no-brainer or a very strategic move for you guys. Why was that?
Well, one is you have a new company coming in that may do different things with the area. And I think one of the themes that I believe in is the consolidation theme. As gold price goes up, CapEx has been a big problem for companies, and that's what a lot of people have been in fear of, is that prices may have gone up, but CapEx has gone up. But when I sat down with one of the senior big three CEOs, I said, what do you do to combat it? And their answer was, you own bigger swaths of property. And the reason why is you want one road, not five.
Yep.
One mill, not five. And when you look at the James Bay region, the best part about it is the hydroelectric program has created all this infrastructure of roads and power where there wasn't, 20 years ago, 30 years ago, and it's relatively unexplored. You got a big natural mine with Eleanor is the third largest producing gold mine in Canada, and it's up for sale. And so you're going to have someone come in probably that's creative and want to do something with it. Now, what's interesting about our joint venture that we have next door is our biggest target, the one that all my geologists want to hit first, is in the middle of it. And we finally own it as of 100% as of last April. And so we did a summer project on it looking at the geochem, and we're going to target that, and we want to go back and drill it. And that's exciting because for investors aren't coming into juniors to get 20%. They want a 10-bagger.
Yeah.
And those are the types of things. Nunavut, new big anomalies or targets next to big mines. I mean, those are exciting things. And the irony is we're probably the best financed junior in the space because of our position with Dolly Varden. And so we've got the means and we've de-risked it. Our price is washed out. And when you take out our cash, our securities, and the Dolly Varden, our valuation is around $18 million. And that puts us around, somewhere between $3 and $5 an ounce, which is at the bottom of all the ranges. And we've got probably the most fortitude to go after these assets. So there is something that's off. And I think the catch-up trade will be, potentially what happens with consolidation across our different regions, or we're able to just push it to the point where we find a big discovery outright.
Yeah.
Yeah,
or maybe something will happen with Dolly Varden as well, and there'll be some jump with that. But I think the main thing is, obviously, in terms of the real 10-bag potential, obviously has to be within your own portfolio. What's the plan at the moment? Because obviously you did the summer drill campaign. You've just released one drill result, right? I think like yesterday.
Just yesterday, yeah.
I'm assuming there's more to come out, and there's more to be seen.
There is. So that's the drilling that we did in Serendipity. We also did some assay work up in Nunavut, and we went up there. We had some big targets 3 years ago that we weren't able to follow up on. They're conceptually, it's outside of the typical iron formations and in the shear zones. And it's something that's got 10 meters of significant grade up there, and that's really enticing for majors. And so we went back up and sort of tested some of our theories. We didn't do any drilling because we didn't have the money to spend this summer. Mm-hmm. The goal is we want to get back up there next summer. The goal is we want to find a partner to work with us up there, and that would create an ability for us to monetize what our stock value is, plus have the fortitude to go up there and continue doing big swings up in the big properties. And so it's, again, we had a producer up there this summer. The first question they said was, how did a junior get such a massive property, and how can you afford to keep it? And we have, the way we structured it, it's not that expensive. But we got huge access. We got a 100-person camp. We got millions of equipment up there already. And again, we're still focused on Eau Claire and stepping out and finding new discoveries in the east. So we've got a lot on our plate. We're not sitting on our laurels. We're not playing golf in a bad market. We're active.
Good. Okay. All right. And just, I guess, to wrap things up, because I know obviously we're at the conference, you've got other meetings you've got to run off to. So, look, what can we be looking out for over the next 12 months? Say we're sitting down again this time next year at Beaver Creek. What do you want to be able to tell me you've achieved in those 12 months?
You know, we'd like to have more results from our projects. We'd like to step out and do more greenfields work. I think we're going to get more clarity in some of this consolidation stuff that could be interesting. I don't know which way it's going to go. You know, we pay attention to just what we have in front of us. We've got $2.5 million of flow-through money that we can put to work this fall or next spring to follow up on what our summer program was. But we still have more results coming from Committee Bay and also the Eleanor South property. So we'll be releasing those in coming weeks.
Good.
And that should be upside, I'm hoping. And then waiting on permitting for the Eleanor South property. And, we'll see what the market gives us. We're trying to read what the capital markets is going to be like. If there's more capital available, we'll do more.
Yeah. Good. Tim, thank you for the update.
No, it's great, Peter. Good to see you.